All right, I think I solved my technical difficulties. I apologize. Sue me. Call your lawyer. Anyway, welcome back to Strongman Personal Finance. We got an exciting day of earnings today, so let's go ahead and dive right into it. Now, if we check out the earnings calendar, if it actually freaking loads, we got some big names announcing. We got Visa announcing their earnings after the bell, Procter & Gamble, UnitedHealth, our favorite company, AstraZeneca, Merck, Boeing, Spotify, my favorite, and Sbux, who I absolutely love to mock and insult. So we're going to start with UnitedHealth Group because I'm not sure if Visa has actually announced their earnings yet. Let's see what UnitedHealth Group has done today before we dive into the earnings. So if we look at the market in general, it's down. Oh, is that a vertical line in the after hours? Anyway, let's go ahead and check out UnitedHealth, see what it did today. It's down 7%. This stock has absolutely collapsed. Year to date, it's down 48%. I mean, if you pull it up over the 5 year, even 5 years, it's down 12.93%.
Yeah, just buy individual stocks, bro.
Now, over the long run, of course, the stock has gone up massively, but you got to ask yourself, when is this thing going to bottom? When is the pain going to freaking end? Because they have not had a good day today. So let's see what UnitedHealth Group announced. They reestablished their full year outlook and report second quarter 2025 results. Now, before we do that, let's see if fraud comes up. Fraud? No, nothing about fraud. Interesting. Weren't they having a fictitious billings of Medicare and Medicaid? Full year 2025 revenue outlook of $445 billion to $448 billion. So let's compare that to the prior year. 448. So last year they had wow. Hold on a minute. That's not the total. Okay. So they've been actually growing revenues pretty freaking fast. So if you go back to fiscal year 2020, they had $257 billion of revenue. By fiscal year 2024, they grew their revenue to $400 billion. And now they're projecting 448. So they've been growing their revenue pretty significantly. Look at that. 6%, 11%, 12%, 14%, 7%, 9%. That's pretty impressive. Okay. Especially for a large freaking company like this. Those health insurers are making an absolute freaking profit, aren't they? Okay, full year 2025 earnings outlook of at least $14.65 per share. What were their earnings before? Let's go look. I always like to look at the prior year just to see how they've been growing their earnings. So their EPS is actually projected to, let me go back and check that. What do they say? 14.65. So their earnings are actually dropping. So if you look at their earnings per share right here on this column, 16, 18, 21, 24, 15, and now 14. So their earnings are definitely taking a hit. I wonder if it's because of fraud and other charges. And then second quarter earnings of 3.74 per share, adjusted earnings, absolutely useless, of 4.08 per share. So they've been taking a hit.
Okay, and here's the CEO. We've embarked on a rigorous path to being a high-performing company, committing fraud, fully serving the health needs of individuals and society broadly.
Yeah, making a massive profit off of health. Good job. Okay, on May 13th, 2025, UnitedHealth Group suspended its 2025 outlook, which probably sent the stock plunging. But they're updating their outlook. So they're projecting decent revenue growth, but earnings drops. Wonderful. So let's see. Okay, so they have their projections for revenues and operating earnings split between Optum and United Healthcare. Okay, let's see how they compare that to prior years. Let's keep looking. Yeah, look at their quarterly performance. So they're comparing June 30th, 2024 to June 30th, 2025. So revenues have grown pretty significantly. Like, that's pretty impressive revenue growth for a large company. It went from $98 billion in the second quarter of 2024 to $111 billion in the second quarter of 2025. That's crazy. But you can see the earnings from operations have dropped by, what, 30%? From $8 billion down to $5 billion? That's a pretty big hit. Their net margin dropped from 4.3 last year to 3.1% this year. All right, so their revenues grew driven by growth within UnitedHealth and Optum. Wow, that's very specific. Second quarter earnings from operations were $5.2 billion. The second quarter results included $1.2 billion of unfavorable discrete impacts, such as reflecting $620 million related to individual exchange business, which includes the acceleration of future losses related to the second half of 2025 and several settlement and other provisions. So are they saying these are one-off charges? Yeah, until the government freaking slaps their wrist. All right. Second quarter consolidated medical care ratio of 89.4% increased 430 basis points. The increase was primarily due to medical cost trends, which significantly exceeded pricing trends, including both unit costs and the intensity of services delivered, and the ongoing effects of Medicare funding reductions, but no mention of fraud. Medical reserve development was $70 million unfavorable. Okay, so they're having issues with their payment of claims versus the revenues they're collecting. Days claims payable of 44.5 compared to 45.5 in the second quarter and 45.2 in the second quarter of 2024. So ideally, when you're running a business, you want to get revenue and receivables as fast as possible and delay paying claims as long as possible. Because if you think about it, if you delay payment, you can have that money sitting there for liquidity and you can make interest on it. So they're actually paying claims a little bit faster than before. The decline was driven by Medicare Part D program changes. Days sales outstanding declined 1.6 day per year over year and 2.4 days sequentially on customer payment timing. Okay. So it looks like, yeah, they're getting margin hits from a couple one-offs, and they're paying claims a little bit faster. Oh, but wait a minute. We got dividend guidance here. In June, the company increased its quarterly dividend by 5%. So the earnings have dropped, but they increased their dividend to 2.21 and returned $4.5 billion to shareholders through dividends and share repurchases. Okay, they talk about return on equity. Cash flows were $7.2 billion. Let's see. But like I said, no freaking mention of fraud at all. Yeah, look at their 2025 outlook. Operating margin of between 2.6 to 2.7%. Let's go look at their prior margins. Yeah, they're taking a huge hit in their margins. Oh my God. They're having a lot of problems. I mean, if that's their full year operating margin guidance, that's a massive hit. Okay. So I guess this is some statistics of like how they're growing their insurance base. Let's see. What are they saying? Okay. Yeah, they're having issues. I mean, I'm not saying this company's going to go bankrupt, and I'm sure it's going to be a buy at some point, but I don't really know when. Okay, let's see their profit margins by segment. So they got Optum 2025 outlook. So Optum Health operating margin of 3 to 3.1%. Optum Insight, much higher margins between 18 and 19%. And Optum RX, I'm guessing that's prescriptions, 4%. So whatever this Optum Insight is, they're definitely printing a lot of profits off of that. But it's also the smallest revenue source for Optum by far. Okay, let's see. Optum Health. Optum Insight. Full year 2025 Optum Insight revenues are expected to range between $19 billion to $19.5 billion. So they're growing it. Decent clip. Okay. So looks pretty good. All right. And then we have, let's see, they're talking about Optum Insight, Optum RX. Let's look at the financial statements. What do we have here? Okay. So we got their two main revenue segments are Optum and UnitedHealth Group. They have a lot of intercompany eliminations. Look at that. 164 billion. All right, this is their guidance. So Optum is bringing in the majority of the earnings. This is the projection for 2025. Investment and other income, 4.4 billion. Interest expense, 4.2 billion. Let's see. Okay, their operating margin, they're saying the guide is between 4.8 to 5%. That's still a huge freaking hit to their margins, especially from prior years, but that could be one-off things. All right, revenue growth year over year. Premiums, how much did premium growth? And this is the premiums you're freaking paying and your employer's paying if you have an employer. So premium revenue grew by 14% year over year. 14%. And a lot of that, I bet you, is just premium increases for people. Good Lord. Products. How much have products grown? 13.5 divided by 12.2. 10%. And then services revenue has grown by 3%. So their fastest revenue growth is freaking premiums, which you and your employer are paying. And trust me, your employer definitely freaking factors in how much they're going to be paying for your freaking healthcare. All right, medical costs. How much have medical costs grown up? These are claims, I imagine. 20%. So premium revenue has grown 14%. Claims have grown 20%. Operating costs, small growth. Cost of products sold have gone up pretty significantly. Yeah, I bet you their product margin has definitely gone down. Yeah, they almost took a loss on cost on products. So they generated 13.5 billion of revenue from products, and they spent 13 billion roughly flat. So their margin on their products, let's see. %4 gross margin on products. Oh my God. What a freaking disaster. They spent $1 billion on interest. Okay, so the big growth in expenses is medical costs and cost of products sold. I mean, that's barely profitable. Lord. What a freaking disaster. Let's look at their balance sheet. So they got 32 billion of cash, 24 billion of receivables, and 37 billion of other current assets for total liquid, roughly current assets of 93 billion versus total current liabilities of 110 billion. Okay, so they have a current ratio below 1. Ooh. Long-term investments of 52 billion and other long-term. This is not a very specific balance sheet of 162 billion. Okay, they really didn't increase debt. Let's see. Let's see what they did on their cash flows. Okay. For the 6 months ended June 30th, 2025, I don't really see many add backs. Yeah. I mean, in 2024, they had a huge loss on a subsidiary, but this year it's a lot lower. So their cash flows from operations have actually grown pretty significantly year over year if you compare the 6 months. Let's see. Loans to care providers, cyber attack. What is this? Oh, that's funny. That's from last year. Okay, they spent in the past 6 months, they spent 5.5 billion buying back shares and 3.9 billion on dividends. So dividends paid have grown 6.7%. And then share buybacks have grown. Oops, I did the wrong number there. Hold on a minute. I'm doing it live. Stressful. And share buybacks have accelerated 80%. Damn. They're really trying to get, I mean, I guess if the stock's going down, that's a good time to buy back shares. Okay, so that's UnitedHealth. So you got some margin compression. Their revenue is still growing at a pretty healthy clip. And their most profitable segment is their freaking insights, their Optum Insight. But of course, it's the smallest percentage of their revenues. So interesting earnings there. Okay. Let's check and make sure everything's okay with the volume. Everybody can hear me? Wonderful. All right. Let's move on to Spotify, my hot guy. So I used to be a user of Spotify, and then I realized that YouTube actually has something equivalent to Spotify. It even has its own freaking app. So I've been using the YouTube Music because I have YouTube Premium, and I use that for YouTube as a business expense. And then you get the freaking YouTube Music app on top of that. So I don't know why people use Spotify. Oh, it's Joe Rogan, bro. All right, so let's see what Hot Godify has done. Let's see what the stonk did today. I mean, Spotify's been on a freaking tear. Down 11%. Yeah, I guess the earnings weren't that good. But look, it's up 132% in 5 years. And for the past year, it's up 92%. This company has been freaking running. Forward PE of 56, trailing PE of 102. That's pricing in some serious growth. And then analysts have a price target of $723. So let's see why the stock sold off 11% today.
Spotify.
I'm a trader to Spotify. I did have student pricing for a while. All right, let's try to zoom in here as best we can. Okay. So Q2 2025 monthly active users are 696 million. That's a growth of 11% year over year. Premium subscribers, where they actually make their money, I'm pretty sure they have ads for like people that don't pay. But obviously they probably make most of their money from premiums, I would imagine. So their premium subscribers have grown 12%. And their ad-supported monthly average users up 10%. So they're still growing users pretty fast. Let's see. Revenue from premium up 12%. Revenue from ad-supported down 1%. For a total gross profit of 19%. Oh, it's grown 19%. Excuse me. I'm like, that doesn't seem right. Their total gross profit has grown 19%. That's pretty impressive growth. Their operating income, this is their profit before interest and taxes, has grown 53% year over year, but it's down a little bit from the prior quarter. And the net cash flows from operations up 44%. So they're posting good numbers. I mean, their users, their profits are growing faster than their users. But that's still pretty healthy user growth. 12% premium payers. Pretty good. I don't really see the issue. All right. Let's see. This is a horror. Look at this. I don't even want to read this. It's like just a smash of words. Let's see if we can find some pretty charts. Okay, key highlights. Okay, users grew 11%. We know that. Premium subscribers grew 12%. Let's see. Gross margin finished in line with guidance at 31.5%. That's, for software, I would think gross margin would be higher than that. But I guess, they have to pay out to the freaking the musicians. So I guess this isn't like a typical software company that has 80% gross margins. Let's see how their gross margin has grown over time.
The gross margin.
I bet you 10%. They would have 10% higher gross margin if it wasn't for Joe Rogan. All right, where's their gross margin at? Yeah, they've been growing it. Yeah, but this is definitely their gross margins are definitely lower for a software company, but they have increased gross margins, and they've increased their operating, but they've been consistently profitable for a year and a half, and they've had bottom line profit that's been going on for a year and a half, and they're printing pretty significant free cash flow margins, 16% for the trailing 12 months. Not bad, Spotify. Still not as good as YouTube. Okay, so they're talking about free cash flow. And of course, this is denominated in euros. So you got some exchange issues here. Currency impacts your earnings for overseas companies. Okay, they expanded audiobooks to Germany. They launched voice activated DJ to 60 plus markets. They expanded the Spotify ad exchange to include Magnite and launched audiobooks for premium users. Oh, are they going to take down Audible? I'll stick with YouTube. Thank you very much. Okay. So their users beat guidance. Their monthly active users beat guidance. So they guided for 689 monthly active users. They actually posted 696. Premium subscribers, they guided for 273. They beat it by 3 million at 276. But total revenue actually missed guidance. Gross margin met guidance, and operating income, they had a big miss on operating income. So they guided for 539 million euros of operating income, and they actually had 406. So maybe that could have been part of the reason why the stock sold off, because they missed earnings. Okay, we saw the financials. We've already seen the freaking summary. Do they have a guide for the rest of 2025? Look at this. They don't make a lot of they're not printing good margins for their ad-supported segment of their business. Their premium gross margin is 33%. Okay, let's see what they have to say. Premium gross margin was 33.1% in Q2, up 171 basis points, so 1.71%. The year-over-year trend was driven by revenue growth outpacing music costs, so they're gypping the musicians. Net of marketplace programs and audiobook costs, partially offset by Spotify partner program costs. Interesting. Sorry, I have to use my freaking mouse pad because I only have 2 USB ports. That's for my camera and microphone. Okay, operating expenses increased 8%. So they actually grew their revenues faster than operating expenses. Absent the effects of year-over-year movements in currency and social charges. What is a social charge? Is that some communist European crap? The 5% year-over-year. Okay, so currency impacted their operating expenses negatively. Yeah. As a reminder, social charges are payroll tax. Oh, wonderful. Payroll taxes. Payroll. That's like their social insurance in Europe. Such a scam. Social charges are payroll taxes associated. That's actually a risk for company profitability in Europe. And probably in America too, if once they actually charge more for Social Security, which they will at some point, trust me. With employee salaries and benefits in select countries where we operate. Since a portion of these taxes is tied to the intrinsic value of share-based compensation awards, movement in our stock price can lead to fluctuations in the taxes that we accrue. That's interesting. Well, I guess that makes sense. Okay. So basically they had more payroll taxes because their stunk went up massively. Free cash flow. Okay. They've been growing. Look at that free cash flow growth. Wow. That's pretty incredible. And it all started in Q3 of 2023. I mean, they were sucking right when the clown market bubble popped. They were sucking. They were printing no free cash flow. And then you see an explosion. So you can see why the stock price has gone up. Wow.
Capital allocation.
Let's see. As an initial step, on July 28th, the board of directors approved a $1 billion increase to our existing $1 billion share buyback program. Oh, the stock's vertical lining. Let's buy back shares. Bringing our total authorization to $2 billion. And they've used $104 million of the existing authors. So they have $1.9 billion of dry powder to buy back stock. And the share purchase authorization expires April 21st, 2026, but can be renewed by the shareholders. Okay. So they have $2 billion authorized to buy back stock. Okay, we see users. Where's all the growth happening? Wonder if they have numbers. So I imagine most of the money comes from most of the like hard currency comes from Europe and North America. So Europe has dropped from 38% to 37% of subscribers. America has dropped from 27 to 25%. Latin America has gone up 1% as total, and the rest of the world has gone up 1%. So let's see. Yeah, it seems like most of the growth is that they have some decent growth in Europe. And I need numbers. Like, it's hard to read that freaking chart. Wow. Outlook. Here we go. Outlook for Q3 2025. Total monthly active users, 710 million. 14 million new monthly average users in the quarter. Growth. Total premium subscribers, 281. Total revenue of 42 billion. And that assumes a 4.9% headwind due to foreign currency exchange. Yep, that's right. Gross margin of 31.1%, so it looks like a slight contraction, and operating income of 485 million, including 25 million in social charges. Social. All right. So interesting earnings. I mean, they're growing pretty significantly for a decently sized company. I can't even read these financial statements. They're too spread apart. Wow. Okay, so that's Spotify. I guess maybe the market didn't like their earnings or revenue growth projections, and they also had a miss on operating income. So one of those two probably caused the stock to sell off. All right, we still doing good. Yes, we are. Okay, now we're going to do Visa. Visa my Cheesa, if they actually released it. Yeah, I think we're in Q3 for Visa, so they haven't even dropped their freaking earnings yet. Let me double check. Yeah, maybe they would release their earnings at 5. So we don't have their freaking earnings. Wonderful. I'm out hanging out here till... they just dropped. Literally, as I refreshed it, they dropped. All right, what's Visa doing? Visa. Oh my God, down 2.53%. What's going on here? So in the past 5 years, Visa's up 78%. I think that's underperformed the S&P, I think, if you include dividends. 1 year, it's up 35%, and year to date, it's up 11%. All right, so let's see what Visa has here. Let's zoom in a little bit. Q3 2025. I hate how companies don't have normal years. Oh, let's have a different fiscal year to make it confusing. So net revenue is up 14%. God, these companies just grow. They just grow and grow. Net income is up 8%. Earnings per share is up 12%. Payment volume's up 8%. Cross-border volume, excluding intra-Europe, up 11%. And cross-volume total up 12%. These companies just freaking beast. Process transactions up. Yeah, people are spending, man. People are spending. All right, so they got a bunch of word salad here. I want to see some pretty charts. Okay, the earnings call is at 5 p.m. Eastern. We are not listening to that. Let's see what they have for guidance. Okay, well, let's look at the income statement first. So service revenue's up 9%. Data processing revenue is up 15%. International transactions, 14%. Other revenue, 32%. Client incentives. The spending, I guess that's a cost, up 13% as well for total net revenue growth. So the 14%. So the fastest revenue grower is other revenue and data processing revenue. The service revenue is the one that's been kind of lagging the average. Total operating expenses up 35%. Damn. What's going on there? Let's see. Non-operating income up 208%, but it's a very small amount. I wonder what's driving their operating expenses up so high. Okay. Oh, but they have non-GAAP here. I wonder if they had some kind of like one-off charge because their operating expenses grew pretty significantly. Let's go look at their statement of cash flows. We'll be able to see what that was. Okay. So their total cash from operations in the last 9 months is $16.8 billion versus $13.2 billion. So they've grown their cash flows from operations pretty significantly. Is there an add back for why are the expenses up so much? Is that just because they're just up? I mean, they've been spending more. They grew their client incentive spending by 10%. Yeah, I'm not really sure why their expenses are up so high. Usually you'll have like if there's a charge, you'll have like an add back on here. But I'm not seeing what it is. Let's see. How they doing on capital expenditures? Small growth in capital expenditures. Small acquisitions, $887 million. Okay, repurchases. I'm sorry, there's a freaking vacuum outside. Repurchases of common stock up 30%. They spent $13.3 billion in the last 9 months buying back stock. Dividends are up. Let's do the math here. This freaking calculator opens or not. 344. Dividends up almost 10% year over year. Proceeds from, okay, so they issued some debt. They issued almost $4 billion of debt. And what did they spend that on? Because their capital expenditures didn't really go up. Did they use that to buy back stock? I mean, their stock buybacks are up 30%. But I'm not sure what this debt is for. Or it could be a refinance maybe, but I'm not sure. Okay. Operating expenses. Why are they up so much? So we're comparing year over year. So personnel expenses grew from 1.5 billion to 1.7 billion. Marketing grew from 378 million to 421 million. Networking is up 20 million. Professional fees up about 30 million. Depreciation up about 50 million. General and admin up about 100 million. Litigation provision. What's this? Litigation. Are they getting sued? What's going on here? Okay, so a big jump in their expenses is because they accrued some legal expenses. For what? I don't know. Maybe they'll tell us. Litigation. Okay, current year's results include a special item of $615 million for litigation provision associated with the interchange multi-district litigation case and other legal matters. What's that? What is this case about? Let's see if we can find it. Yeah, I'm not really sure what's going on here. Okay, we're on their balance sheet here. So they have $2.6 billion of restricted cash for litigation. That's funny. Yeah, it doesn't really say. Okay. Litigation provision includes significant accruals related to certain legal matters that are not covered by the U.S. Retrospective Responsibility Plan or the Europe Retrospective Responsibility Plan, and additional accruals associated with the interchange multi-district litigation that are covered by the U.S. Retrospective Responsibility Plan. What is it freaking for? I'd have to do research on that, and I'm not doing that right now. Okay, so basically their expenses went up because of litigation. That's the main driver of their expense growth, which did outpace revenue growth. Okay, let's start. That's Visa for you. Pretty good growth overall. Expenses got hit by litigation, but it happens. Okay, we got Sbux. Starbucks, my favorite company. Okay. Oh, no. No, this is old. Please tell me they freaking released their earnings. Let's refresh. No? Where's the earnings? Starbucks. Did they release at 5? Oh, here we go. Now it refreshed. All right. Well, let's see what Starbucks stock is doing before we even read this.
Starbucks, yeah.
Why don't you just go to McDonald's? It's way cheaper. Oh, it's up 5%. Let's look at the 5-year chart. Bro, it's a large U.S. corporation. Buy the dip. All right. Let's see the earnings. God, this is ugly. Just a bunch of word salad. Global comparable store sales declined 2%, driven by a 2% decline in comparable transactions, offset by a 1% increase in average ticket. North America sales, comparable sales, declined 2%, driven by a 3% decline in comparable transactions, offset by a 1% increase in ticket price. So U.S. sales are down. International store sales were flat, driven by a 1% increase in comparable transactions, offset by a 1% decline in ticket. China store sales increased 2%. Wasn't China like a big issue with them? Weren't they having issues in China? They're actually growing sales a little bit in China, driven by a 6% increase in transactions, offset by a 4% decline in ticket price. Okay, so they're cutting prices, but for competition, probably. But they actually grew transactions by 6%. So China's like the actual like one bright spot here. Maybe that's why Hello? Why am I so small? God, I freaking hate this. This is so stupid. I'm sorry. I'm at a freaking hotel. Sue me. All right, let's do some comments. I'm only responding to members, by the way. P. Morton, that very intelligent of you to blame politicians. Increase international stock holdings for the real hedge. Yes, it is a great hedge. I love international stocks, and I love treasuries too. Is there a difference? One of my stocks went up. That means I'm right. That means I'm a freaking genius. All right, I don't know what you clowns are talking about. It's up over 6%, 12 years of VT. We making fun of VT? Check out WTI oil. It's almost back to 70 with Trump maybe putting some sanctions on my boy. Putin's my boy. I didn't know that. That means I smart. Okay. Oh, we got a super chat. Thank you very much for $2. VTIX and OGLIX are my two international. What is OGLIX in my 547? Ogre? Is that Ogre stocks, bro? Thank you for the super chat. All right. Some of you members are talking to each other, so I don't see the need to pull it up. There goes the feed. Oh my God. Did I lose internet halfway through this freaking nonsense? 10 minutes ago. Oh my God. Yeah. After this, like, traveling and doing live streams is a disaster. Okay. Oh, did we get another super chat here? Look at this. Strongman grifting on cheap internet and neglecting fan. I can't help the internet in this hotel. Did you guys miss the whole I covered Starbucks. Did we miss all that? God. Yeah, at least I won't be traveling for a while after this. Thank freaking God. Oh, we got 3 super chats. You should donate all your VT to charity. I am not donating anything to charity. You know when I'll donate to charity? When I'm like 65 years old. Okay, I'm in the accumulation stage of my life, and I have significant opportunity cost donating to charity. I will give money to charity when I'm old and super rich. Okay, because if I invest $1 now, maybe that dollar will be $4 in the future, and I can give $4 to charity instead of $1 now. And charities can lick my scrotum. I don't trust charities. Yeah, I saw the viewers dropped massively. I'm like, oh, what happened? I had like 26 viewers. I'm like, that's kind of unusual. All right. Well, I think I'm going to close. I got one more stream scheduled. So hopefully that stream doesn't crash. I apologize. I'm in a freaking hotel. Thank you for the super chats. Thank you, members, for all your comments. I actually have a members only video that is filmed and ready to be uploaded. It's about Chris Sane, my favorite reaction guy. So we're going to do the next live stream. And then I'm going to go have dinner. And then I'm going to upload my members only video. I'm sorry if you missed the I covered all of Sbux. Of course, it freaking blanked out. But it is what it is, I guess. All right. See you guys soon on the next live stream.